And I just want to get started here with the S&P 500 market. Let's take a quick look at what's going on in the markets today. Stock news is a bit mixed. There wasn't really, the Dow's only up about 40 points, the S&P up less than 10. I think it's about 5 points to be exact. And the NASDAQ only up a little over 7 points so far. So we're waiting on, I believe there is some earnings news coming out this week. That's pretty important. The news from Friday was digested pretty quickly, and nothing really occurred as far as significant moves in the early morning. And I don't foresee anything pushing this market significantly higher in the next, I would say, in this session or the next one. But right now, the signals we have confirmed from last week. Again, keep in mind, even though this is confirming long right now on the 60-minute chart on the ES contract, you want to be a little careful just given that it's the first day of trading of the week and the rally that we've had. I think everybody keeps anticipating a sell-off. We're not getting much in the way of profit taking yet, so as soon as that kicks in, I don't know if this buy signal is going to hold up. I do see us getting near this possibly upper range of 1670s, close to 1677, 1678, and then possibly rolling over and into some profit taking at some point during the week. That being said, on the intraday charts, because there's such a tight range, again, it's one of those days where you don't necessarily have to be trading. You can take some ticks out of the market depending on which market you're trading. The ES I put first here so you could see how it moved today. This is a 4-tick range bar chart. And the buy signals that we got in the early morning, let's see, right here at 1673 was good for about three and a quarter points. That was confirmed by the Cobra indicators as well as our buy signal confirmation and the price candles. Okay, our market force indicator did confirm there was a little bit of momentum to the upside, but this is tough. This is pretty tough trading on these moves, mainly because even though the bias is to the upside, let me see if I can show you guys here where that occurred on the larger time frame. That signal was 828. So as you can see, the candles here were getting smaller on the 30-minute chart. Let me make this bigger so I can show you real quick. Excuse me, I'm losing my voice just from the weekend. But we had this push down in the pre-market. Cobra was relatively flat and negative, but it was still flat. So that being said, you need to bracket your price in order to give yourself some sort of idea of where price is going to break out. And we didn't get much movement, so I wasn't expecting much today, to be honest. It's not necessarily a day I would be trading this contract. I'll take a look at a moment at crude and also the gold contract so you guys can compare, so we can compare those other two markets as well. But what you see here is we pushed lower and the candles didn't have any follow through. Normally what you want to see if we're going to get a really big sell-off day is these will start pushing early and these candles will get bigger and bigger. And what we actually had happen here was not only was our market force not giving us a lot of strength to the downside, it's pretty flat, it was also showing a bit of divergence as we moved into these new lows. And to top it all off, the bodies on these candles became smaller and smaller until we got to the point on this candle here at about 8 a.m., which gave us essentially a doji formation. Even though Cobra was still technically selling, this doji was actually slightly bullish, as you can see from the blue body there. Let me get rid of that box so you can see it. Okay. The very next candle in the 30-minute was confirmed with an push higher. Again, you don't take these long just like that because you still have the Cobra going against you. And what typically happens is you can see here price pushed up to the Cobra, okay, and then bounced off the Cobra and came back and closed down. So we had to push up. The next candle finally broke through, and this is where Cobra began to turn. And so right in here is where we had the bulls take over from the bears, so to speak, and we did have some buyish activity take over there. We also had a consolidation on our market force indicator, and we finally got a histogram showing some sort of buying pressure. Remember, our high and low indicator, the sole purpose of the high and low indicator is to show us when buyers are in control versus sellers. This is when the buying activity or buying pressure, buying volume is more aggressive than the selling volume. Okay, don't get confused and think that, well, there's more sellers than buyers. No. There's a buyer for every seller and a seller for every buyer, but usually one party will be more aggressive than the other, which is why we get these fluctuations outside of value. Okay, also keep in mind on the ocean, we're at the midline here, which is kind of like the reversion to the mean. Okay, think of it as price deviating away, coming back, deviating lower, coming back up to the midline. Price tends to channel within this range because it is what's considered a fair value or fair price for the instrument. So right now we're pushing just slightly higher. I do see resistance up in 1677 areas. I wouldn't expect too much selling to take place today, but again, everybody's still waiting for this sell-off that they're talking about. They're like, it's got to come down, it's got to crash. This can't go on. We can't keep going to 1700s. And then on the other hand, you have another group of traders that are on the other side of the fence, saying that we're heading to new highs, all-time highs. Okay, so that's the ES. Let me wrap that up, and let's move on to the crude oil contract. I'm putting David to sleep. I'm sorry, David. My voice is killing me. I lost it at the beach yesterday, and it's probably the most monotone I've been in a while. So if you guys want to see a specific market, okay. He said the market's putting him to sleep. I agree. And you know what's funny is I talked to a buddy of mine in Chicago, and he trades strictly futures, and I'm trading both forex and futures now, working with Catch the Turn. But he's like, yeah, we're looking for something to do today, and it's funny. They got about 15 guys at a trading desk, and they're like, there's nothing going on, and they don't have any authorization to take any positions today. So I think they're all going to get out early. Lucky for them. We'll go over the auto trader, David. I'll definitely get on with you today and look over that as well. So we'll take a look at it and see. But sometimes that's a good thing. If it's not taking any trades, that means nothing's really setting up. And we don't want to force it on days like this. I mean, yeah, there are a few ticks that you can take out, like we saw in the ES. But some people are just so eager. I meet a lot of new traders. They're like, okay, I got to trade every single day because the market's open and people are making, lots of money's being exchanged, but that's just not the reality of trading. The way we look at price information is we want to see trends develop. We want to see consolidation kind of subside. And we know that markets only trend about 20 to 30% of the time. Those of you that have been studying this for a while, and the rest of the time they're ranging. So that's not to say there aren't opportunities in ranging markets, but they are more difficult, and they do take a different level of insight when you're analyzing something really short-term intraday on a reversal versus going with the flow or going with the trend on a larger swing, which is we're trying to simplify it here for you initially. As you get more advanced with the indicator and the platform, you can start doing scalps and reversion trade, reversal trading, counter trend trading. But we teach really the basics of establishing the trend in the longer terms, and then from there looking for setups within that swing. And we hope for that follow through. That's really what we're looking for. We hope the probability is good on those days that we get into those trades to get a little bit of follow through in the market. So, all right, here's a crude chart, and this is a 4-tick range bar chart again. Just for those of you that aren't familiar with range bars, every 4 ticks of price, a new candle will form. And personally, I know a lot of futures traders like range bar charts because they clean up a lot of the clutter that you get from maybe a 5-minute chart or a 1-minute chart, and so they prefer to use range bar charts. I use range bars, tick bars on my own charts, and I also use minute charts for the larger term. So for the overall directional bias, I like to look at a 60-minute, a 4-hour, and like a 30-minute chart. And then when I get down into my day trading charts, I have a 500 tick, 1500 tick, 4 or 6 tick range bar, and those help me identify swings. And then on my small chart here, you can see that I have 2 lines. So in all these other charts, you see 1 line of Cobra, and that's something that Vladimir, the owner of the company who uses these on Forex, does very, very well. He only uses 1 Cobra, and he told me, he's like, hey, I'm getting some questions. They're asking about, why are you using these 2 Cobras? So I'm going to go over that with you guys too. There's a lot of new faces in here, so I'm going to go over some of that information with you as well. So what we found is that the Cobra was very, very responsive on minute charts on the larger time frames. But on the intraday charts, it's good at giving you an overall directional bias, but there are swings within that bias. And so we had a hard time. Traders were saying, hey, I'm not sure if I should take a pullback, if I should wait for price to come all the way back to the Cobra and then go long. So we developed, this is something I've been working on for some time, was using 2 alternate Cobras on our chart along with our other standard indicators. And there isn't much to it, guys. There isn't, anything really magical about it. What it does is it gives you a good confirmation that you're going to get swings on these smaller intraday swings. And as long as you stick with the larger Cobra, confirming by the crossover of the faster, I say the larger Cobra, it's really the slower Cobra and the faster Cobra. So let me correct myself. The idea is here, once we've established what our bias is intraday, so for example on crude, we're at 105.80s right now currently. We did push down early to 104.90s, and then now we kind of reversed back. But during this session here, during early morning from 4 a.m. till looks like about 10 a.m., there was an opportunity to take some shorts. And so we're going to go over here to the 30-minute. You can see where that first signal confirmed on the swing. For those of you that trade the QM, this trigger, I did get a question earlier if they took the QM trade on the second bar at 4 in the morning pre-market. So yes, that was confirmed. That was a confirmed signal. Price did close below the Cobra on the crude contract. And we also had the first signal bar I wouldn't take. Why? Because we don't know if price is going to come through and close below in a continuation or break out and then reverse on you. And we call it a fake out. And that happens very often with breakouts in any type of chart pattern, not just our indicators, but because of the way price moves, you don't want to get caught in these breakouts. You jump in short on that first candle without any confirmation other than the first candle. Look at down here. The market force was very, very small, not a lot of follow through there. And then down here on our high and low indicator, there was selling pressure, but it was still pretty small. I mean, it wasn't significant by any means. So I couldn't use either of these two to give me a definitive, go ahead and jump in on this first candle, even though I would have caught, potentially more of that initial move. But I did wait for follow through, confirmation. So I gave up probably about maybe 20 cents on my entry. But once I had that confirmation, this is a 30-minute candle, keep in mind. On a 30-minute, if you're going to trade swing on a contract like crude in the morning or pre-market on a 30-minute candle, you've got to give yourself some room. So in this case, our stop was about 30 cents away from 106. Okay, if your entry was a little bit less, you might have used a 40, 50 cent stop on crude, but it did push down significantly, and you can see that it paid out approximately, I'm even going to put it up here just so I don't exaggerate the profits. I don't want to put it down at the extremes because most people don't get out at those, right? We get out on the reversals. We get out when price finally tells us, hey, it's coming back against you. So I'm going to put it here in the middle of this yellow candle, and that was about a 53-cent move. Okay, so on your first, if you're trading multiple contracts, your first target would have probably been 10, 15 cents and then you would have brought your stop down to break even or slightly better and just trailed price along with Cobra. And it did not take you out until approximately 10 a.m., a little bit after that. Okay, so that was a total potential move about 53 cents or 53 ticks on crude. Really nice trade pre-market into the open market, and that's all we've really had so far. Price did reverse and move higher. I wouldn't say that I took this trade here this long. That's not, I'm not paying attention to that right now, given that my 60-minute was so bearish. I was really expecting crude to push lower and possibly break 104s, but we did not get that. So tested 104s, came back up. We're now back up almost at 106. So two pretty big reversals, and you can see that on the candles here pretty clearly. Okay, again on the range bar, let's go over here on the range bar chart to see how you would have taken that. And you can see how clear these swings are with our two Cobra indicators, the way we have them set up, the settings that I'm using on these. And I can help you set these up on your own charts if you're demoing the platform, not a problem. If you want to trade manually. And our auto trader does not use two Cobras, it only uses one, and it's always going to look at a higher time frame, however. So we're doing this part manually ourselves, and then we're looking for swings intraday. So that may work better for some of the contracts that you're trading. Let me go back to that where that short was. That was again, I don't normally trade crude this early in the morning, but the swings were here to be had, and it's really, kept you in the trade all the way through. There is no, getting you out, chopping you out of this. As soon as the candle is confirmed and our faster Cobra closed below the slower Cobra, price was off to the races, and it kept you in that move. And that was much earlier. That was at 2:43. Let's move on to our 4 a.m., which was here. Okay, so this is where the initial move of our 30-minute swing occurred. It's about 3:30 to 4. So from here to here. Okay, so that's how it would look on the 4-tick range bar. And you can also use multiple, if you want to use multiple time frames, which most of you do use, you're welcome to use with these indicators the same settings. You don't necessarily need two Cobras on a higher tick chart or a higher range bar chart. I just have that on the actual entry chart. So the 4-tick would be my fastest chart, would be my entry chart. I put it on there so that it can just kind of pinpoint my entries and get me in at a good area. But you can use a 4 range and an 8 range or a 12 range bar chart, and that will give you a good bias for the day on what to expect as well if you don't want to use a 60-minute or a 30-minute chart. Okay? Let's see, guys. You can see this ranging right here. You can trade these swings, but again, it's one of those days where price is kind of ranging out. Broke down earlier and then reversed completely. So this whole swing here, it looks like it's, let me just figure out what we're looking at here. It's a 42-cent range, so it's definitely tradable. The signals are fast enough that it will get you in to catch the bulk of those. If you're going for 4 or 5 ticks, you can trade these all morning long. Okay, but if you're going for 15, 20, 30 cents per trade, you're going to have to hold these a little bit longer, and you're more susceptible to getting chopped out. As you can see here, we did have a few nice pushes. Now, when price doesn't give you any clear indication of breaking through or confirming like it did here, you just don't take these signals. This would have been a no trade, because even though price turned red here, Cobra actually never closed below, the faster Cobra never closed below the slower one, and then right before, as the faster Cobra started moving lower, we had yellow candles again. So this is just chop territory. You just stay away from it. Finally, when you do get some follow through, you get a retest up to both of the Cobras. It does not break. Your entry would be on the next candle, so it would be like right here. Okay, for those of you asking, how would we enter on these charts? So that's how you would play that, and that was 105.37 roughly, 38, and that pushed down all the way to 105.13. So easily over 20 cents potential there on that swing. And this is, again, 6 in the morning East Coast time, pre-market. So if you're going to be trading this pre-market, just be careful. Keep in mind that prices do chop more, and you do get more of these scenarios here. But even here, 106.20s to 106.19, if you're going for 4 or 5 ticks, you're going to have people that scalp these all morning long. I have a couple guys that all they do is trade options, and they scalp these intraday. So they're doing pretty well with a 4-tick range bar. And I've been testing more on tick charts, which I'm pretty happy with. And we also have our Alpha Auto Trader trading on the 60-minute, the 30-minute, the 15, and also we're trying to find the optimal settings on the tick charts. Right now it seems like it's, depending on the market, it's between 1,500 ticks down to about 300 ticks. Okay, so that's crude. Moving forward, let's see, we had a few swings there. I'm trying to see where the actual reversal was. That was about 8:44 in the morning before the U.S. New York session opened. And we can see our first candle didn't confirm long on the 60-minute until about 11. So on the 30-minute, it was about 9:30:10. So you can see how the tick range, if you're scalping these, I mean really if you got into this position here, this one would not have taken you out, never broke below the Cobra, the slower Cobra. This one did break below Cobra, so if you were trailing your stop, you would have been stopped out. And your choice now at this point is either to, as price moves back above, to wait for a pullback and re-enter the trade long, or stay on the sidelines, because it's tough once you get out of a trade like this to jump back in. It's very, psychologically, it's very difficult for us to make that decision. That's one of the things the auto trader does a lot better than we do when it's running, is it will take those entries on the signal no matter what. So it will get you into those, and then it's up to you to manage the trade at that point. So we did push. Let's see where that 930 is. So we missed all that early run because we were waiting for confirmation on our higher time frames, which came about here in this area here. Okay, so there was still plenty of time to get in, but you did give up quite a bit by waiting for that confirmation, and that's going to happen anytime you're trading a trend strategy. Okay, you cannot get in before that. There is no early entries on that. There's no second guessing the signals, because we need Cobra to really confirm. We need to see those candles close above Cobra. For Cobra to do all this and close down here takes a lot of buying pressure. It takes a lot of buyers to come in and do that. Otherwise it won't. Cobra will stay up here and stay red, and this next candle would have gone from blue back to red, or red-green. Okay, that's the way our Cobra indicator works. It's designed to measure the swings in price and the volume activity, and make a decision as far as if it's going to stay above price and stay red, or stay below price and stay yellow, because that's giving us a longer term trend. So it does take a lot of buying activity to change this, and it came in here and it did, and sure enough, guys, when we started this, we were down at 105.80s. We are now at 106.10s. So our Cobra once again is keeping us on the right side of the market. It's just a matter of getting in on those entries, getting in on the smaller time frame charts to capitalize on this push. So that's about 20-cent move right now, and just in the last 10 minutes since we've been talking. And again, the 30-minute Cobra also had to confirm, had to push down and through price to turn yellow and stay yellow. Okay, because what will happen is, as these candles form right here, the signal candle, when it goes from red to yellow, is price will it will flash. It's not repainting, it's just recalculating, because we don't have it set to calculate on the bar close. We keep it set to calculate on the bar open as the bar is calculating. So it's constantly recalculating the buying and selling levels coming into this candle, and so it'll flash red, yellow until that candle closes, until the 30-minute candle closes. In this case, it closed bullish, and this yellow was, solidified. And we knew we had our bias for the rest of the morning. 1, 2, 3, 4 more candles from 105.20s up through 105.75s. Now we're pushing 106. So, Cobra did a really nice job of getting us in early on that. Excuse me, guys. Cobra did a really nice job of catching the reversal on the swing. We also happen to be at the lower ocean. The ocean does recalculate, but this is pretty much where it would have been. It's not going to deviate much from that. Where it does tend to move a lot is back here as you go further back, because it's only calculating the last 100 candles. So the prices that occurred back here no longer apply to these swings, okay? So you don't want to pay attention to it back there. But up at current price, where price is actually moving and opening and closing, these are deadly accurate. These are very, very good. And so one of the strategies we teach to our manual traders, those of you that aren't comfortable with trading, an automated system, a lot of you still use the manual platform. That's fine. It works great. You can actually, there's a lot more flexibility with the manual platform. So what you can do is you wait for, one of our strategies is a conservative entry. And what that is wherever the 60-minute is relative to the ocean. So if our prices tends to be up towards the upper ocean, we wait for the 30-minute to also be towards the upper ocean, and then we use a smaller time frame to enter a trade the other direction when we get a confirmation. Okay, so in this case, let me see if I can show you how that would have looked. So as we can see, we pushed up right about here, and you can see on the 30-minute we are actually touching the first extension on the upper ocean, the blue line, and we're not ideal situation on the 60. I'd like to see the 60-minute up here, but we're not always going to get that. It's a little too picture perfect, but we want to see that price was actually pushing up towards that upper range, okay, and it did. And our 30-minute also happens to be at the upper range of its ocean indicator. And so what I look for here now is a reversal, okay? Not to mention, if I look down here at my market force indicator, I do have a bit of not a divergence, but I have a decrease in my market force indicator because we made new highs, but the indicator did not make new highs over here. Okay, and that's a very clear entry short right here. You want to wait for the next candle to confirm? By all means. Either way, you would have caught that swing. Okay, so those are just a couple ways that you can use this. You can use a 60-minute, a 30-minute, and then I'll have a 15-minute, which disappeared. Let me get my 15-minute chart. And again, you're not trading on a 60-minute chart. You're just looking for price to be at an extreme range. You're looking on your 30-minute chart for price to be at an extreme range, and then you go down to your 5-minute, your tick chart, your 4-tick range bar chart to look for your entry in the direction of that new reversal. Okay, as price confirmed lower, we knew we were at the upper range. We knew there was room for it to move not only to the midline, but all the way down to the lower extreme, and sure enough, it did. So in this case, it worked out really well. If you combine these elements of the higher price extension on the larger time frame, the 60-minute, the 30-minute, then you can go down to your 15, 5, 3-minute, and look for your entries. And you're going to have a very, very high probability entry, and your stops are going to be minimal. Your stop loss is going to be predefined at the top of the swing, so you're not giving much room there to be wrong. And if it does come back and take you out, then it doesn't matter because our analysis was wrong anyways. So we're going to take a small stop there. But overall, every time you take these, I would say 7 to 8 times out of 10, they're going to be very profitable for you. How much are they going to pay each time? I can't answer that because we don't know the swings, right? In this case, it paid out 53 ticks. Sometimes it'll only pay 15, 20. So it really doesn't matter because we're not trying to catch every single tick on this. We just want to catch a chunk of it. And so as long as you're leaving a little bit on, if you're closing half of your position so that your trade is risk-free, and you leave your other half of your position on in case we get a runner, in this case down to 105 or 104.90s, well then you would have pretty much capitalized on the entire move and then been taken out right here back around 105, looks like probably 105.20s. So you would have given back a little bit, waiting for price to continue lower. It didn't. It actually reversed, but you still caught most of that move. Okay, so that's crude. Let's go over to the gold market. Give me just a minute, guys. I'm going to grab a glass of water. Thanks for your patience, guys. I'm back. Just needed to, my throat was getting really dry. Alright, so here are the gold charts. And, you know, gold is one of those things where I'm reading so many different opinions about it. Everyone seems to be thinking that, you know, gold's headed to 1,000, possibly $900 an ounce. So I don't entirely disagree with that, because I do think that the U.S. economy is somewhat on the course for, you know, just a nice rebound. The dollar strength has just been amazing. You can't argue with that, regardless of what you think of the politics or the business, the decisions that are being made in Washington with regard to printing money and quantitative easing and how the Fed is running things. Whatever they're doing right now, it's working. It's just business is doing very well. I just talked to a buddy of mine in Las Vegas who's getting, they rehired everybody at, he works at the Wynn Resort. And he said in the past year they've rehired pretty much everyone that they had laid off. All the people that they had given partial or part-time hours to, they pretty much all full-time. They have a term for it they use over there, board, I can't remember what it's called, but these guys are working tons of hours now, and the business is picking up all through there. And I always use Las Vegas as a gauge, because I watched when I was living there as everything went down a few years ago, when everything was like really bad. And I thought, you know, half the strip was going to shut down at one point. It just seemed like there was no way these guys could stay open and remain profitable. But somehow they did. They managed. They did. You know, they cut back where they needed to. And to see this turnaround now, and even him telling me what he's seen there, is just, you know, you can't argue with that. And so that being said, gold is losing its luster. Don't want to go too much off topic, but gold seems to be losing its luster as an insurance policy. And that's really what it was when it rallied from, God, even 300-400 an ounce up to close to 1,000. Most of that activity was generated by large funds, institutions that were accumulating gold as a hedge for the disaster that we were expecting with the dollar and everything. So that didn't happen, and here we are today. Gold hit a peak of about, what, 16? What, 14? I don't remember. But, oh yeah. Let's see how far back I can go on this chart. It's not looking good. Maybe my daily chart will look better. Okay, about 17.90 an ounce. And here we are in this nice downtrend. Let me show you our daily real quick here. Beautiful downtrend. Look at the momentum increase. Each histogram is pretty much larger than the previous one, with the exception of here. I mean, what do we make of this? This is amazing push to the downside. These candles, while getting a little bit smaller here, consolidating, this is to me just going to be a pullback in the direction of a downtrend, just based on the angle of this. I mean, this would take a lot of buying to come in and turn this around. And this is a weekly chart. So let me see if we have a daily chart as well. Let me switch this one back. Okay, so on the daily, we have had a nice little bounce, somewhat of a reversal. We are about to start testing the upper range of price where it should push, so don't be surprised if you see gold hit up towards 1,300, maybe 1290s, and then roll over back to back down past 1270s, 1260s. So the next area of support would be clearly on these. Let me increase this. I like to keep an eye on these levels, guys. If you're looking at the longer term charts, keep an eye on these levels right where Cobra alternates, right where it goes from red to yellow, especially on a time frame like the daily, because that is a very pivotal area of price where decisions to go long were overtaking the decisions to go short, right? The guys that were ready to keep selling were no longer willing to sell at this price, and buyers stepped in and took it higher. And so here we are, we got a bounce. We're at 1283s right now. It remains to be seen if they can take it up back to 1300s. I don't see it breaking 1300s though. So that's just from a daily perspective. Now, how can we capitalize on this on the intraday charts for those of you that are trading it? Let's take a look here on the 60-minute. Okay, so this morning, again, on the weekly, we're in a downtrend. The weekly trumps, as you know, the weekly is going to trump everything until it doesn't. So a lot of buying is going to have to take place on the dailies for those weeklies to start changing. But we are seeing that. That first, we saw the weekly candle is getting smaller. That last weekly candle that I showed you is all this right here. Okay, it's just these three or four bullish daily candles that came in and just kind of reversed it back. So now we're going to go to our 60-minute chart, and sometimes I'll put a 240-minute chart up as well, but I don't need to do that right now. I'm just going to show you guys for the intraday purposes. This morning, 1 a.m., we got a nice sell signal confirming. There's plenty of time to get on board with this move. The first candle actually went short before Cobra confirmed, so that was on here. Cobra started flickering, okay? And then at the beginning of the hour, the next hourly candle that opened would be your entry short, okay, which would have been approximately 1286, 1286s, 1287. Okay, the price does lead the candle just a little bit because these are smooth candles. Okay, anytime you use like a Heikinashi or something like that, you're going to get the price leading the candle a little bit. But we have these settings really tight on these. I think I have it set to 2 and 3 for the CTT red, yellow, and blue, green candles. So your entry would be right about here. In this case, it did push all the way to 1279. So we're talking, you know, about 7 points, a 7.6 to 7 point possible move on gold this morning, just on the hourly chart. Okay, that's not even going to your small intraday chart. So the way some of our clients will trade this that I've spoken to is they have one account that they use for swing trades or position trading, and they'll put maybe one or two contracts. They don't want to risk too much, but they'll put it on this hourly swing, and then on a different account they will intraday trade it long and short if the setups show themselves. So they know their bias for the day. They already have their position trade established on the hourly, and they'll just come over here. As you can see, look where this confirmed on the 30-minute chart was right here. So you actually had an opportunity on a pullback here to get short anywhere in this range from 1290 to 1288, 1287, which we talked about. We then got a selling confirmation arrow right here on the 30-minute. Okay, so if you just want to use the 60 and 30, that's fine, you can. Also keep in mind, look where we are on the 30-minute, guys. Look at our ocean indicator. Our ocean indicator is, price is up at the upper range of our ocean. So more than likely, as we saw here, price tested, came back, tested again and failed. Okay, we have somewhat of a double top formation there. And price was unable to retest or even break this Cobra. And these lines do act as dynamic support and resistance. So these would be dynamic resistance areas where price would have to get through. And you can see how long these wicks are on the, let me change this to the highlighter. You should be able to see that though. You see these wicks piercing the upper extreme of our ocean? Price could not go any further than that in this occasion. And so that is very telling. I mean, you can look at it as a candle formation. You could look at it as just exhaustion. These are double top, however you want to interpret it. It's very clear. Great opportunity for you to take a low risk short entry. We also had a little bit of divergence on our market force indicator as well as our high and low. What did we see on the high and low? We saw buying pressure declining, and so as buying pressure was declining, we saw the divergence here forming and a little bit of buyers coming in, or excuse me, a little bit of selling coming in initially, and then we had a lot more follow through as price continued. Okay, so finally price came back, retested one more time, and then broke down. So you actually would have had an earlier entry using a double top and the divergence as your entry as opposed to waiting for a confirmation. But those are just two different ways I showed you of trading that move. So it's either way. It depends on the way you look at charts, how adept you are at identifying price patterns. But the nice thing was everything here confirmed shortly after this occurred. And it's really just all you had to do was get in anywhere in this move, and your stop would have been at the highs. Use a 2 to 3 point stop on gold, and as price pushed down, you caught the bulk of this move. Let me see what that was, just to be, let's say you got in over here. That was a 10-point move. And if you got in earlier, okay, so that was either a 12 or 10 point. You gave up about 2 points by waiting for a confirmation from the Cobra and the price candles and our CTT averages signal, sell signal to come in. Okay. You also keep in mind here, this consolidation here, you don't want to be caught in that. Many people are like, okay, well, I don't want to get caught in these choppy areas here. It seem to happen quite a bit when markets are not trending, and that's going to be true. You know, again, our system was designed to be a trend system. What we've been able to do is tweak it enough to where you can use it to trade reversals and intraday swings. Okay, but originally it is, from the get-go, it's been built to be a trend trading system, and it works very well when you're getting those, you know, power moves in the mornings. You get those breakouts to new highs or breakdowns, market selling off. This will get you in every time. But how well can it help you out on days when the market's more like this, like today, you know, a little choppy on some of these instruments? Let me see, what was I going to show you guys? So it was a 10-point, 12-point possible. Okay, well, that's it. That's pretty much all I have for that. And let me just get rid of this. Okay. Trying to see if there's anything else I can show you here on the chart that would be helpful. Again, the 15-minute will always show you smaller time frame entries for those of you that want to go for, that don't want to use, you know, you don't want to be using a 30-minute or 60-minute chart. That's fine. 15-minute will get you in very cleanly on those. And that was at, let's see. That was at 3. It was right about here. Okay. Again, it was also confirmed here. It's between 245 and 330. And that's pretty much all I got. That's a 15-minute. This indicator here, I had a question. This is the CTT stops indicator. So if you're going to take a trade on the 15-minute, this would how you would trail your stop down with this, as opposed to using the Cobra. So it's up to you if you want to use that. It's pretty much just an ATR stops indicator that we had built for our platform, because we had a lot of people requesting stops, something that would help them place their stop orders as they move, as they traded intraday. And so we have this indicator available to you, and it's fully customizable. Colors, the shape, the size of the squares, everything. So it's just it's a pretty standard tool. Many of you have probably seen it on other charting packages, but I don't think Ninja gives you one that's customizable like this built in. I'm sure there's something you could download out there, but we went ahead and just provided it to our clients as a convenience for them. All right, and here's the 4-tick range. Again, with the 2 Cobras, it just really helps catch the beginning of these swings. And it does a nice job of staying either above or below price for a significant amount of time. I mean, you want to get enough out of it to where even if price action is a little bit choppy, it's able to get you some ticks out of it if you're going to be trading in and out of it. So here is this is earlier in the morning. Some really nice swings. Are there any questions, guys, on the manual indicators? I have a few questions, a few clients I'm going to have to get with after this on the auto trader. But as far as the discretionary platform or our main platform, do you guys have any questions at all on how to use it, how you could take setups on it on intraday, any other markets that you'd like to see? Just feel free to type it in, and I'll go over those with you. I definitely recommend attending, even if you're not a Forex trader. Go to the Forex webinars. Vladimir does those, and he does a really nice job of explaining the markets, how the indicators, he looks at them to analyze the Forex charts. And believe it or not, on the very liquid Euro USD, USD Yen pairs, it's very similar to looking at something like the gold or crude or the ES contract. Okay, so they are different markets. They do trade differently, but they move similarly as far as our indicators are concerned. So I would recommend going to one of those. He gives you a different perspective. He talks to those a little more animated than I am, and he goes more into story. He likes to tell, kind of go into trading stories and things like that. So, all right. Well, thank you very much. Thank you. Thanks for coming. I know you guys have a lot of places you could be in the morning, so thanks for taking some time to come in with me and going over the markets. Well, hopefully tomorrow we'll have a little more action that we can show some really nice setups, and we'll just go over the market. We'll do the same thing tomorrow, go over what the market conditions are, and I'll probably give you guys a little bit of an outlook tomorrow as well as far as where I see the prices heading on a few different markets as well. Thank you. All right, have a good one. Take care.